learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in October 7th, 2020, and we need to talk about why the stock market went down today. Today was a crazy day out of nowhere. I want to call it a black swan, but pretty much something happened that wasn't really expected to happen, and that was the president calling off the stimulus talks. It happened via tweet, so based on that, you could even see the reaction that the market had to adjust. This was very, very surprising, created a pretty wild action, and not to mention, you barely see it, but Powell was speaking today too. So we have the Fed minutes tomorrow. We have a lot of other things, but I wouldn't be surprised to see a carryover from this. Honestly, very surprising again with everything was pointing towards something very, very positive for the market. And we talked about that yesterday. And I really said, watch to see if this kind of gets snuffed almost instantly, or at least with bonds. And well, that's exactly what happened here today with this news. So we have to watch what happened. I want to explain why this is important, what this relates to, and how we could kind of get some examples, as well as what we're looking for coming into tomorrow and how we could play that. So I got the plays. I have the keys, everything else for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want 1,000% and 100% plays before and after a Bible study, we are the place to be, and we're glad you're there, so thank you for being nice. And the most important thing you need to do, post your watch below there, so what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, first thing is, the reason why we dropped today is because Trump instructed his representatives to stop negotiating on the stimulus bill. Now, earlier in the day, this is where it kind of links up with everything. Powell was talking about the need for stimulus. We are going to get the Fed minutes tomorrow, but this has been huge. Now, there's a few other pieces. We could start talking about the SCOTUS seat and the politics, and that's what he brought up, but this could be political negotiations regardless. I will say this is like the trade war that we saw around 2018, 2019 with the tweets, but I'll just say this right now. The market was expecting a lot of things when it came to stimulus. They were even pricing election and Biden and this and that, but a lot of people were not really expecting a hard stop by the president to say, okay, we're going to stop negotiating all out till the election, maybe a soft landing, maybe a back and forth. But this is kind of unique, especially given the context with Powell. Now, you could see that, like I'm saying, if you look at the velocity and how markets moved when this news came out, it was big. Even the platform started glitching out. This was a bigger movement because it's like, whoa, people are like, what just happened? This was unannounced. This was in the form of the tweet. This would just like the trade war, where Trump would be like, we're not negotiating, we're doing this. So as you saw with the trade war, we eventually got that into a deal that you don't really care about anymore. So this is just going to heat up things coming into the next month or so. There's a lot of political implications. People are saying this and that, and he needs the vote or he doesn't, all this stuff. It's getting wild. But fact of the matter is, it was very, very surprising to markets. I'm sure a lot of people weren't expecting this, not to mention even everything that's happened leading up to this with the president. So it's giving me trade war vibes. I want to pay attention to it, but also now too, depending on what the minute says, that could give us a little bit more information on this, because the minutes were highlighting another bigger need for stimulus. And even after our Fed Mester said that no stimulus would lead to a slower recovery. And that's kind of what Powell said as well too. So we've already got a reaction even from the Fed on this, but we need to let the market digest. And I wouldn't also be surprised to see more developments from this tomorrow, and that could shake up the markets. But we will see. Markets can also brush this off. We have earnings, and that's even what makes this so critical. We were at every single pivot point. The fact bond yields were starting to go up again. It was looking like we were going to get temporary relief, but go back to the charts, you can see everything from TLT. It's just like this big giant wick that kind of stopped a clear momentum of where we're going. Even with the dollar, it just stopped everything in its tracks. You haven't seen that volatility in a really long time. This was just a random event. It even spiked the dollar. It spiked everything considering the nature of all of it. So that is why the market went down today. It was important, and that's what we're going to see. But now moving forward, like we said, stimulus talks are going to be the real talk of this week. Now this is what we're going to be focusing on, mixed in with the health of the president, as well as now the election and then earnings coming up. So we will see what happens tomorrow. All in all, this is going to be exciting. It is going to create plays, but just like we've been talking, we still need to wait and see. We need more conclusions, but this is more information. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, we made a lot of different plays today. Not as many credit spreads. I wanted to make some credit spreads. However, market either moved too fast or I hesitated on some and I didn't. But we have some other credit spreads that did some stuff. We'll go over those. But first play was Boeing. I'm still holding one of these. Do I think you should play it again? The premiums went up a lot. We have almost 1,000% on that contract. However, I will say, you guys know how Boeing moves. If it keeps up with it, this might be one we could double dip on. But the key is don't buy options at a premium. If you could get some of these with lower premium, that would be good. Or even selling premium. I may even want to sell some puts maybe towards the end of the week or calls, depending on how it plays out. We'll see what happens. But the first play was the news came out on Boeing that they're cutting it. We got the news very, very early. Shout out to Chad. I think shout out hits. Somebody posted it in there, but we had it early. The market didn't react, and then it started getting press from CNBC. Even there was a LA Times article on it, but they cut pretty much their forecast and are expecting demand to slow down. But now I got it. I think within the first 3 minutes, we were actually watching something, I believe. I think it was, I forgot what it was we were watching. I think it was Powell. I mean, it seemed like that happened later, but I got it at 11:14 here. So this was the first one. I grabbed 3 of the weekly 155 puts at 24 cents, but I caught it within that third or fourth candle. The stock was already dropping, but what made me really go for it was this was big velocity. It was like $3 or $4 in 3 minutes. You haven't really seen that in Boeing in a long time unless it was on the upside. So I was like, hey, let me go in on it. I only spent $75 total. It started dropping about 4 minutes later. Those contracts went to 90 cents. I sold 2 of them out at 90, got my initial investment back plus a pretty sizable profit, but now I'm holding the last one. So I'm still in that play. I want to kind of ride it out pretty close to the money now. So we'll see. Again, that end of the day drop helped us, but watch to see how these contracts move. I wouldn't be surprised to be able to double dip on those, but that was the first play we made today. Then the second one was during volatility, and now this is even going to talk about kind of the strategy. We'll get into that, but you've seen me execute this before. I was trying to sell calls. The platform was lagging, but we had some exposure to stuff. I was still holding that Boeing, but it's like, how do you kind of play this? You don't want to pay too much premium. So I started looking for both leaders and laggers, companies that were leading the market and lagging behind, and then we wanted to look at the option premium to see how they were. So that being said, I went for even now the slow movers as well. I did 2 plays on Bank of America and McDonald's. So as the market was dropping, what time was this? 254. So like right around here, if you even look, it was barely red, I think, on the day. It was still a little bit green, but the market was going down a lot more at that point. That was right before one of the bigger candles, but you could see the market was a lot lower than where it closed. So McDonald's was still holding up there. You guys have seen me do this time and time again. I went after the weekly. I got 5 of them at 21 cents. Held that, and I rode these out a little bit. You guys will even notice, although I did end up making them free, I really, really rode this volatility because this was a true surprising volatility event, and you saw it. There was actual like price discovery right in front of you. This was hard to kind of digest for the market. So as I was holding that, I went now for Bank of America, and then that was like 2 minutes later, but they were kind of leading the market now in general, but they are one of those slower movers. So they were already moving down a lot, leading the market, but it's such a slow mover, small stock that some of these options were still cheap. So then I grabbed 100 of the weekly 2350 puts at 3 cents. Held those for about like 12, 15 minutes, even though they went up, sold half of them at 7 cents, 50 of them, made them free, still holding those. And then a few minutes later, sold those McDonald's, sold 3 of the 5 at 45, got my initial investment back, and now I'm holding. These are weeklies. They could be very, very profitable, but you know how my strategy is. I like to make them free and then ride the rest out, exactly what we did even with the Boeings earlier today. So that always helps us. That always takes us a long way, so don't forget about that. Even coming to the options, so you could see, this is when we got the play at 3 cents, but I want to show you what I'm saying with premium. even though Bank of America and banks were actually getting clobbered and leading the way down, I was able to get these contracts cheaper than what they were going for the day before, believe it or not. They were going for about 7 cents, even 4 cents at one point throughout the day. We paid 3 cents for them. So they did shoot up. A lot of people ended up piling in, but that's when volatility was really, really picking up. So that was the Bank of America one. The McDonald's one was actually surprisingly, you could even see, you would think it would be the other way around, but they were the lagger. They were green on the market, but I actually ended up paying higher than all day's prices. We still ended up paying, 2 cent premium, 10%, but it was still ended up being a lower price than the day before. So at least we were able to get in the middle of the volatility, but you can see these are hard to go up. So if these moves don't continue, these will expire. That's why you want to make them free and do so as soon as possible, or at least just be smart and, take your profits on the ones with little bits amounts of time. But there was that. And then as far as everything else, the final plays I'm going to be looking at, I don't have plays on these, but these were more really impacted by stimulus. Airlines were another leader down, but I'd watch the airlines, cruises, casinos, any industries that would more or less get stimulus now, or some that reacted more positively. We want to see how this digests, and that could create some of the winners and losers tomorrow as the market digests this. So those are the ones I'm going to be looking at. But there's those companies, and then as far as everything else, we're still holding the rest of these credit spreads. That McDonald's from yesterday ended up dropping. We got about 40% on that, 47%. I'm still holding that, but I think this volatility kind of made it easy. But these are for next week, so I could already close out with next week. I might want to do that. But there's that. The DraftKings ended up slapping us. I was up on these a little bit in the morning, but then remember we had 30% on them yesterday. Now we're down 30% because this is selling a put. The market started dropping, so still holding that. You guys saw that, and even then, there's the Boeing. So this morning we were even down on this. This was that initial Boeing spread from last week. Boeing was up this morning, so I was down on this about like 30-40% or something, but then that news hit, and now this is expiring this week, so it's not going to come up. You can see I already have 84%. There's $75 of value. I could buy this back, but this is probably going to expire worthless. So you guys are seeing how these credit spreads are working, and this is why I'm showing you as we're up and down on them. You're getting to see the valuations. And then Qualcomm, you guys remember this one yesterday. I ended up being down on it. What happened? I was down on it kind of a little bit today, I think. Again, actually, I was down a decent amount, almost 50%, but then that drop came in. They expire this week. It got clobbered. So we still have at least $1,000 to take off the table in premium, even from last week. You guys have been seeing this strategy get executed, but those are the other plays. As far as everything else coming in tomorrow, I like my slow movers. There is Levi's. They ended up beating, so we have that play, the $18 Novembers. I'll watch that. Maybe that goes crazy again. Some retail stocks have gone nuts, but we didn't see a follow-through from Nike, so we'll have to watch out for that. I got RKT for this small long-term portfolio. I like that. I got 10 shares at like 20-something bucks, but we'll talk about that in the long-term video, but I really like them. Watch Facebook now. These are the other main plays I'm going to watch. Facebook, Amazon, any of the tech ones, but Facebook, Amazon, Apple, especially Amazon and Facebook, and even other companies like even Snapchat, Pinterest, any tech companies that could even be acquired, but there was now this talks of these antitrust legislation, and it's really, really drastic. So depending on how it plays out, it could affect stocks, but this one seemed a little bit different than some of the other talks we have. So we want to monitor that effect and see how it affects it. But both stocks had pretty big outpacing days, the NASDAQ in general, but you even see the S&P closed similar. So some names drop bigger than others. So watch out for those. Even Apple, they had their event and they dropped. But mainly for some of these plays, I really want to be looking at some of the broader global plays and reacting to what we see and going after what we see with the premiums. Laggers, leaders, seeing what happens, and then selling premium to take advantage to see where the market is going. And once we kind of have an idea, then we could kind of confirm for some bigger plays or now even set up for earnings. But either way, it's going to be exciting. It's looking crazy. October has already been nuts, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to have this stamina, baby. It doesn't matter if you start. It all matters about how long you last, baby. Are you going to have enough energy when the time comes, baby? Get hard. But the goal loves you. I love you. I'm going to see you in the morning. Let's go.